All right, people, we should be live. It's the 21st of January 2026. The time is just after 7 p.m. UTC. Just give me a quick audio check in the chat that you can see my screen and that you can hear my voice, please. I will kick off the stream. In today's stream, we've got a special guest joining us, Sokio from Insilico Terminal. And it'll be a good stream for those of you who may be familiar with terminals, or maybe you've never considered using one before, and we'll get a good preview of some of the cool features that have just been shipped. All good, yeah? Audio's coming through good? Great. And again, also a special thank you to Prime XBT, who obviously sponsor me, and I've been in partnership with them for the best part of 3-4 years. Anything said in today's video is not financial advice. And so for today's stream, if you watched the first stream of the year from around about a week or so ago, I shared my thoughts about the market more from a purely price action perspective. Well, in today's stream, we're going to have a continuation of what we discussed from the previous stream, but with a focus on order flow, looking at footprints and market profiles. So really looking at through the lens of order flow, looking at in terms of what happened on the inflection points and how we can maybe consider incorporating some of the information that we see from an order flow perspective into our own trading strategy. So it should be a very educational stream. I think that there's something for everybody in today's session. And just one final aspect I'd like to address. I think quite a few of you who are aware that I'm running a mentorship from January through to the end of March. It's not a paid mentorship. It's not a paid service. It's in partnership with Prime XBT. I think quite a few of you missed the cutoff date. So what I will be doing is after the end of this stream, I shall be attaching a Google form link. So if anybody's interested, you can sign up and kind of meet the criteria, and you'll get access to that mentorship, which then runs until the end of March. Okay, that's for those of you who are DMing me in the inbox. On today's stream, so let me just figure out the technicals here. Pretty shit with this stuff, kind of to be honest, but just give me a second. Sokio, are you with us?
I'm here, yeah.
All right, folks, if you can just let me know that you can hear him on the mic, and we'll kick off. How's your day been? How's your
My day
been,
is
actually?
my 2025. It's been a very good year, I would say. I've been with the terminal now for more than a year, and I really did refine my trading a lot. I took over more responsibilities. I started the podcast. I did a bunch of stuff for the terminal. I traveled a lot. I had a really nice 2025.
Excellent.
And my day today has also been quite chill. I just went to the gym. It's very cold. I'm in Romania right now. It's very cold here. Yeah, nothing too exciting. How about you?
No, amazing. Yeah, it's been a good year. 2025 was great. I thought from a trading perspective, 2025 was fantastic. We had a lot of volatility in the market. My approach to 2026 is completely different. I shall be essentially focusing more upon the higher time frame trades, but just generally, I think it's been exciting because we've seen the emergence of various coding agents, Claude Code, Codex, Gemini, GLP 4.7. And so we kind of at this really interesting inflection point where if you've got an ounce of vision in terms of, well, look, as a trader, how can I build a set of tools that can enhance my trading ability moving forward? I just think it's an exciting time to kind of take one step back and then look to go 2 steps forward with whatever it is that you're doing in your life. But it's a great. I just think we're in a very special era when it comes to the advancement of AI and technology and trading, and just to amalgamate those 3 worlds together. I think it's just going to be really exciting going forward. It's just going to open up so many opportunities. That's kind of my thoughts there, really.
Yeah, for sure. I think it's pretty exciting.
Yeah, it is. And I'm pretty excited to see, obviously, you've come on today's stream, and I understand that the Insilico Terminal has released some really cool features into 2026. So that's something that we'd love to cover on the stream today as well. And I think it's important, obviously, first of all, to address is, look, what is the importance of a terminal? I'm sure there's many viewers out there who trade, but have probably never considered using a terminal. So do you want to give us a quick insight or overview of why it's beneficial to trade from a terminal as opposed to just logging onto an exchange?
Like one of the major benefits is definitely that you can use all of your exchange accounts in one place. So if you trade like across multiple different exchanges, you don't have to have 5 different tabs open or something, but you can just have all of your accounts in one place. We even have tools where you can execute orders on multiple exchanges at once. So that makes it a lot easier if you're doing something like that. And then advanced order types are also like one of the biggest advantages, I would say, because mostly the exchange UIs are a bit limited in that regard. It has gotten better like over the years, but they used to be way more limited. And now, so basically, instead of just having the market order or the limit order, you also have different functions where you can place limit scale orders through a range of price if you want to get like filled at different prices, or like not enter your whole size at once. So you can, what I personally really like to use is the limit chase function, which is a bit similar to a market order, but it like chases the price until you get filled. So you get filled in a similar manner to a market order, but you pay limit fees, which is really helpful if you like trade low time frames a lot. So you can save on fees as well. And yeah, we also have just a bunch of different features. Like you can customize everything. You can like resize all the components and put it to your liking and like exactly what you basically need in your trading.
Yeah, great stuff. And I think, yeah, it's been important for me as somebody who's been trading the markets for, well, this is my 10th year of trading. And I think one of the best aspects of, when you're working or operating in such a fragmented space like crypto, where, you've got several exchanges in which you can trade Bitcoin and variations of price, unlike, trading ES or NQ on CME futures, where you've got one single source of information. I think a terminal is really advantageous in that respect, because very easily you can then take advantage of, okay, you have to pay attention to the various exchanges and the information flowing through from potentially an order flow perspective. But then I think it's also the ability to, because of the fragmented nature, is that access to certain pairs which may be available on one exchange, which aren't necessarily available on some of the others. I think that's one of the quickest wins. And just the fact that it's one unified access, interface to access multiple accounts, for me, that's just been a real pain in the arse in the past when trying to do that. So I think that's probably the 2 big reasons as to why I prefer using a terminal. Now, in terms of some of the features as well, would you like to just go over some of the key features that you have and some of the advancements that have been made in terms of the rollout for the platform?
I can maybe just go through a bunch of different. Can you see my screen on stream?
Yeah, we should. Yeah, guys and girls, can you see the screen? Okay. Wait for a quick confirmation, and then we'll crack on with that. But yeah, I think they should be fine. Everything seems to be fine on my side.
I think it looks decent. Yeah, so what you can do is you basically have a bunch of different. We have like classic mode, which is a bit more simplified, but I like to use the multi-mode, which you can see up here, and it allows you to have a bunch of different tabs of like different setups with different components to fit your needs, basically. And you can see, for example, this is like a scalping setup if you want to use the DOM, and also see like trades and liquidations at the same time. Also, like one thing that I just noticed, which is actually one of my favorite features that the terminal has, which for some reason, like a lot of exchanges don't, is that you can just click on the chart and get the price inside of your order form, which makes it just way easier to quickly place orders. And I really love that. For like features in general, we just have like, you can basically move around everything, just like size it however you like. We have a CLI where you can execute your commands in like you can chain commands, for example. You can basically do anything in a command line that you can also do with a normal order type. We have a bunch of different order types, as you can see. And you can also place them as hotkeys, which is really nice because then you can be even faster if you like do everything just from your keyboard. And you can basically, if I just go through a bunch of different setups here, just set it up however you like. It doesn't look perfect right now because I'm only on my laptop, and usually I have like a bit of a bigger screen. But you have order books, you can quickly select any tickers. This is a really cool thing which has been added last year, which is called basket trading, or the component is called complex orders. And this basically allows you to trade multiple different assets at once. And it doesn't only work on how you can see here Hyperliquid, for example, but you can also do it across multiple exchanges. So you could choose whatever you want to do here. You can like add your accounts, and then you can, for example, long Bitcoin, and you could do that across your different exchange accounts if you wanted to long Bitcoin on multiple accounts, or if you want to like go long and short at the same time. And you can basically make a bunch of fancy stuff with this. And what I like to do personally, this will maybe look a bit weird, but this is like my personal scalping setup, basically. So Grip has been talking about like longing altcoins on the Bitcoin 1 minute chart as a bounce play, which is so basically you're doing mean reversion on the 1 minute chart, doing scalping, and when Bitcoin faces liquidations, you long an altcoin instead of like leveraging Bitcoin, so you're a bit more safe on that side because the altcoin is basically leveraged anyway since it's beta. And I had trouble in the past with like figuring out which altcoin to long, because sometimes, or I guess it's not the most difficult problem, but like I found it really frustrating. For example, I most of the time just use Pepe, and sometimes Bitcoin will bottom, but the altcoin won't bottom at the same time. And then it's kind of frustrating when like, yeah, I see Bitcoin going up, but the alt is not going up with it. So I like just use a bunch of different charts. Like I have like 5 different altcoins set up here. And then I use the complex order form. You can't see it that well because it's a bit small now here in the corner, to just like long a bunch of altcoins when Bitcoin is basically bouncing. If we were here somewhere, I would go long a bunch of altcoins. And then you can also have the aggregator set up in here, which is also a bit minified right now, but you can use the usual templates however you like, adjust them, and basically have aggregator within the terminal, which I really like, just to see the tape. The speed of the tape is, I think, really important if you're like trading lower time frames. If you see many orders hitting the book, then you know it's time to pay attention. If you see liquidations and stuff like that. And one really cool thing that I can show here is our news tool, which is pretty new. I think it's only been released like before Christmas, shortly before Christmas, so about a month ago. And this basically like shows you a bunch of different news sources. We have predefined them, so it's like all the crypto news stuff, exchange people, and you can also enable like a bunch of different coin Twitter accounts, and also like macro stuff. And you can also add up to 3 custom ones yourself. So if I wanted to like see my own tweets in here, I could just type in like my ad and add that, and then I would get inside of the news tool whenever I tweeted about something. But it's more as a thing where you can like add your own news sources. But we have all the major ones. So if like a news is coming in, you can get a little sound effect, and then you will basically just be able to read what it says, see the account. And then also, I don't know if I can find an example here, but if there's a news which specifically mentions a ticker, this all has like Bitcoin because it's predefined. But if there's a special ticker mentioned inside of the news, then I can't really find one though. This is not a good time for examples. Or maybe here. Yeah, I guess because this is talking about Solana or whatever, and then it automatically shows you Sol as a ticker, and you can also like click on that, and then it will show you the charts related to that, and you can also pre-pick any size that you want to trade. So if I just wanted to long $100 of Sol, I could press this pretty instantly to be fast and basically trade the news. And you can also what's it called? Customize the sizes that you put here, so adjust it to your liking. And this is pretty real time, so it's really good for news trading if you are into that. And it's also completely free, as is, I haven't said that yet, but the whole terminal is completely free. It's not completely free because of course we are making money somehow. We have to get paid. We have broker deals with the exchanges. So with most of the major exchanges, you can see here all the ones that we have available, like most of the major centralized exchanges. We have broker deals with them, so we get a share of the fee. And Hyperliquid is the only one where we have an additional basis point through the builder fee. And we have also more exchanges coming on the way throughout like this month and the next month. So we are going to up the selection on that because there's a lot more new perp dexes that people want to trade on, and we are pretty neutral in that regard. We don't really like pick any favorites or whatever. We want to see people to trade wherever they want, and if there's a demand, then we are trying to make it happen.
Yeah, I've got a few questions.
Yeah, go ahead.
So I'm probably going to fire some questions which you already know the answer to, but I thought, let me put myself into somebody who probably hasn't used the terminal before. And one of those questions is that you can have multi-pane windows on there with various assets. And so therefore, does that mean I can execute trades all from within the terminal on the actual chart? So say, for example, you've got Hyperliquid here, you could have another chart with Bitcoin, and then one for Ethereum. Mm-hmm. Could I essentially just very easily go across all three charts and execute trades, as opposed to, having to select each specific chart and then manually trying to input the trade? Because I think you mentioned something about right-clicking or clicking on the actual chart and executing a trade, mm-hmm. right?
There's like, I guess, two ways to do it, kind of. So in the multi-mode, you have like this little chain here at the top left of every component. And this basically means if like one component is linked to the other. So we have one component that is used for placing orders and one chart. And if they're both green, so the same thing, then they're linked together. I guess we're also a good time in the market where it's just shooting upwards. But
yeah, I was just watching this, like, what's going on here?
Yeah, it's pretty interesting timing. But what this means is if I'm just like putting these ones to like different colors, then we could have them more or less different tickers as well. So we have like Solana on the main one, and then we can see Bitcoin here and ETH here and silver or whatever here. And then
it's the Trump effect, I think, something to do with tariffs. It's on the actual terminal there. It's on the terminal latest news there.
Oh yeah, right.
That's a great example of the reasoning, perhaps, why we've got this move.
Yeah. So this is actually a pretty cool example there. You can just see immediately what's going on, what happened, why is the market just randomly pumping. If I wasn't distracted, we were like setting it up right now. But so this green one is now connected to this. So if I just go along something, it will execute here. And one way that would be a bit more, I guess, difficult is you can have multiple place order components. So I could have like multiple ones of this, and then all my charts, and then one component per chart, which is connected by color. And I could execute that way. But the easier way to do it is actually the complex orders component, which is a bit like small here. I don't know how well you can see it. But if I pick all the right symbols, or actually, maybe I need to do it a bit differently because I have a different basket set up. But I can just create a new one and use the Hyperliquid account, and then I just have to remember which charts I had to make it easy.
So when you're creating these baskets, can you also specify limit orders, or is it more market orders when you execute? So if I'm trying to create a basket of pairs, is it all just going to execute at once, or can I specify custom price levels where it's more of a limit order, and if those limits get filled, or does the basket work in, it's just all at once, essentially? For those who
You
aren't
can
familiar with basket orders.
you can choose it afterwards. So basically, you're creating the basket first, just to like see which kind of assets you want to have. So I picked the ones that should be like shown here up top. And so what you can do is, if I make this a bit bigger, there's like different weighting. You can choose different weightings for the assets that you have, and you can just split them equally to make it easy for us here. And you choose the order type before you execute. You put in your margin. So if I have like a certain amount, like the $100 will now be split across these 5 assets. And then I can either market order, use a swarm order, which basically just splits up your market orders into smaller sizes, I guess, which doesn't really make sense if you just use $100. But if you trade bigger size, and it's pretty useful, so you don't just like eat the whole book. Or you can also use a TWAP. And how it works for the limit orders is Chase is pretty similar to a market order, so that's just like works the same way. But for the normal limit order and the scale order, since you can't really just like place each price individually, or you could do that, but it's not easy to solve in a practical way. But you can just choose the percentage where it should be away from the quote. So for all of these assets, if I had the $100, I can maybe make it a bit closer so that it is viewable. If I make it like 1% away from the quote, then as you saw when I just pressed execute, we have now limit orders 1% away from where the quote price was when I pressed it. And if I, for example, just use the limit chase order across all of them, then limit chases are going to start across all the things, and then we're waiting to get filled, and we got filled on all of them, and that's basically how it works.
Yeah, awesome. I think one of the questions that I've got coming to the chat is there a way to use this in terms of simulation mode or paper trading? Is there a way that a user can switch that feature on? Or is that specifically going to be via API keys on a demo account? You know, say, for example, whatever exchange that is.
We don't really support demo accounts because it's like a whole different API thing from the exchanges themselves. But what we recommend to like familiarize yourself with the platform is just take a small sub account, put $10 on it or whatever, and then just play around a bit with the order types and the features and see how they work in practice, and figure out how everything works for you.
Yeah, absolutely. Yeah. Now, one of my favorite features of the terminal is actually the limit chase, especially when I'm trying to. Obviously, the way I trade now is completely different to how I used to trade. Before in the past it used to be one entry full size, but nowadays I try to position around a level, so I'm slowly building a position, and just sometimes when price is going in my favor, then I start adding a limit chase because I believe the probability is increased. So that's that's probably one of my favorite features is the limit chase or the swarm. A question for you. So we've got so many different panels here, and I can appreciate you're streaming from a different device today. But let's just let's just assume I've got 2, 3, 4 monitors. Is there a way where I can undock each component? Can I undock each component and just display it on a separate monitor, essentially? So can I drag it out of the current viewport or the canvas and place it onto a separate screen? I hope that makes sense. Probably difficult to do if you just got a laptop today.
I guess, no, I'm thinking about how it would work. I guess if you like use the same tab across all of the screens, then it could work. But if it's like different tabs, then you can't really like drag the components around because it's basically a different website. But you can have multiple tabs of the terminal open as well on different screens if that's what you want.
I mean, that's a great way of doing it. So you can have multiple tabs open across your various screens, right?
Yeah. But you can also just like have the tabs here in the top, like if this is just too much for you. Like for example, this is what I use for just longer term trades where you have just one chart with like a lower time frame and then one daily chart and then just the panel to execute and the positions to manage those and see the orders and just like the CLI to see if they're executed and just make it a bit simpler. So according to your own needs or whatever, you can add or remove as many components as you like if it's like too much for you or too little.
Yeah, interesting. I've got a question for you, and I would just like to get your take or your presentation of this. But
yeah, sure.
I know one of the cool features of the terminal is the ability to decide how much risk or exposure you want to have. So you've kind of got like a hard set risk limit. Is that correct? And you can predefine that. Look, we kind of saw what happened on 10/10, when Bitcoin crashed from 120, well, if you could call it a crash, from 125 to 106 in the space of a few hours. I believe there's certain features, isn't there, that help circumvent you from really suffering significant drawdown if you have predefined risk limits and risk thresholds set. I don't know if you got time, but potentially is that something that you could cover today, or just give us a one to 2 minute primer of that?
Yeah, so the most basic version is basically like the easiest way to show it if I go to a market order and then I don't put in a certain size, but I go to TPSL, so you can automatically add a stop loss and a target take profit to your orders, which you can also make into a limit order, which is kind of nice. But if you want to manage your risk, you can basically just input a certain percentage. Like if I want to risk 5% of my account, then I'm just gonna close this because it's in the way a bit, and now it is disconnected. Because am I still here? Can you still hear me?
You're still here. You're still with us.
I'm just gonna refresh.
It's all good. It's almost like the risk function is like it kind of pre-calculates the position size for you on the fly, doesn't it? Essentially.
Yeah.
So that's what I like about it the most. Yeah. Go ahead.
Put your stop loss here, for example. Then it selects the position size where you would lose $11 or like 5% of the account in this case if the price went to your stop loss. So you can know what your risk is beforehand. And what is also pretty cool is I'm not too familiar with this yet because we just released this today, but we have a new margin component which also shows you a bunch of different stats. I don't know how well you can see them, but it basically shows you how much margin is used, how much is available, what long exposure you have, what short exposure you have, what the delta is, the leverage of your whole account, the margin usage. So there's a bunch of different interesting stats here as well.
I've got a question for you, and again, it's a continuation of risk. Let's just assume that I have a $10,000 account. I open up 5 trades. 5 different trades are all currently running, but I do not want my account to breach more than, say, 2% of my entire account balance. But if my positions start, approaching the 2% threshold for my daily drawdown limit, is there a way where it will actually just force close all the open positions at all, or kind of well, I've probably worded it fairly wrongly, but you kind of get the gist that I'm trying to get to. Is that, look, is there an overview of the actual account balance? Like, hey, we've got 5-6 positions running, but you've breached a 2% daily loss limit. Therefore, does it close all the positions? Is that feature available at all? From a risk perspective?
Not really like in an automatic way. I guess you could do it manually, like through looking at the margin component, or also in the positions component. You could see just how much drawdown you have, but you could do it manually. We have like a nuke button where you can just nuke everything at once, and I can imagine it also to be a feature in the future with conditional orders and the algorithmic orders that are server-side, which I haven't shown yet, but something like that doesn't exist right now, but I guess it could be possible in the future.
Yeah, for sure. Okay, that's actually cool. So in terms of the CLI, what are some of the commands that can be executed? And I guess for anybody wanting to learn how to use the CLI, they can refer to the documents. But
Yeah.
what's a typical use case of the CLI, and why would one use the CLI as opposed to just using the point and click or the DOM or the ladder?
So I personally don't use the CLI that much, to be honest. But what are some nice features that you can do with it is so pretty much if you just want to like buy something, like if we are connected to the hype chart right now, then I would just type in buy $100 worth of hype, and it just executes that as a market order. And you can pretty much do every order type that we have here. And we recently had an update, or not so recently, but like a couple of months ago, where you can also chain commands together. So you can, for example, use like one command here. I don't have it like in memory right now, but you can, for example, just like buy $100 of hype and $100 of ETH at the same time. So you can do something similar as you do through the complex orders component through this. And then you can also bind it to a hotkey. So to be honest, I would need to like look up in the documentation how to like the proper syntax, but you can basically
for sure.
something like bind to B, just like buy $100, and then you can like if I wanted to buy $100 of hype and $100 of ETH at the same time, you could bind that to the B button, and you would just have to press that button, and it would execute your order basically.
Yeah, that for me is quite powerful, because sometimes, like, especially when markets are volatile and that price is moving around and you want to get into position fairly quickly, because price can move away from a level very quickly, or you're chasing, is to kind of have those commands set up before you start your trading session. But again, that's probably more for day traders, maybe for scalpers who want to get in and out of positions very quickly, where, if you're using a point and click on a mouse and you're a scalper, then it's probably going to slow you down slightly, whereas a hotkey, I'm sure you're going to probably spaz away on the hotkey more often than you should, but it's certainly far quicker in terms, or far more efficient, in my opinion, from an execution point of view as well. But no, some really great features. And why don't you tell us more about the server-side elements that you've rolled out? Because previously on Insilico Terminal, it was primarily client-side. But what does it mean now that it's all server-side, essentially, so that the users can understand the difference between the two?
I just have to like share a different tab, I think, if that is possible. I don't know. I'm just gonna stop sharing this one for a second, if that's fine.
Yeah, absolutely. Yeah, go for it.
Okay. Let me see if I can find the proper one. I guess it's this one. Yes. I just had to like switch the tab because this is still on our staging environment and not on the production server yet, because we're still in beta. But what this basically means is something I haven't explained before either, is when you use a market TWAP, one pretty cool function that we have, for example, is you can make it into a chase order. So instead of TWAPing through normal market orders, you can use limit chase orders, which reduces your fees. It works just like a normal TWAP. Like you have you choose a number of lots, you have a frequency, and then it just executes as limit chase order instead of a market order. And you can decide, because sometimes the limit chase obviously won't get filled, so you can decide how much time you want to spend until it turns into a market order, or if the chase fails or whatever. And so previously, if you use the TWAP on the terminal, then you always had to have the terminal open, because everything worked client side, so through your web browser basically. But now through this feature, you can have algorithms running even when you have your terminal closed. And that also means that the time that the TWAP can run, for example, has been increased by a lot, because I think the previous time limit was like 12 hours or something, and now it's up to 30 days. So you can just create a TWAP on Bitcoin if you want a DCA or whatever and have it running for the whole 30 days, basically, which is a pretty awesome feature in my opinion.
Yeah, it's the one feature that I'm looking forward to the most, in all honesty, because I think client side it was good, but it had its limitations. But I think moving server side is something that I've been waiting for, in all honesty, and I'm really looking forward to the fact that you can really set up some complex type execution and just step away from the screen and kind of let it do what it needs to do, essentially. Especially when it comes to even like taking profits. Quite often when we talk about execution, I think one of the things that I often find or have frustrations with is having once I've entered a position and price is going to my target, we can only set a kind of like a hard to take profit level. But something that I've been pushing for and working towards myself, is to have a more dynamic way of taking profit, or a more dynamic way of having let's just say a dynamic stop. It could be based on ATR, whatever it is. That's something that I hope to see eventually at some point in the future. It's something that I've been trying to build myself as well, but it's I'm sure we'll probably see at one point in the future on the terminal. So in terms of the actual application, I think one of the questions that came in, is this for perp trading only, or is it spot and perps?
It's also for spot. Like, for example, if I'm on Hyperliquid here, I can basically also just go to the spot part and trade high spot the same way as I would. It won't show up here in the positions like a P&L chart, but you can see it here in your balances, for example, if you have like a spot balance of hype or whatever. And you can also, of course, trade all the other HIP3 tools. And I think I'm not sure if like all of our exchanges have spot trading as well, but I'm pretty sure like the major ones, Binance, Bybit, Coinbase, all allow for spot trading as well. So yeah, it's not just for perp traders.
Yeah, no, great stuff. And is there anything else that you wish to cover? And also, where can users find out more about the terminal, and in terms of documentation as well? I guess, will you guys be putting out more guides and documentation moving forward for users? And where can they find that from?
Yeah, also, the best way to learn about the software, I guess, is honestly, in my opinion, just to like make an account and play around a bit. If you don't even need a normal KYC exchange account if you don't want that, because you can use Hyperliquid. So just like load that up a bit, play around with it. Check out the documentation. It's pretty extensive. It's pretty good. Our YouTube channel has a couple of tutorials where you can like see some stuff in action and see how it works. But one more thing that I would like to show as well, which is new and part of the beta, is the conditional orders, because you can also add conditions now to the execution of your orders. For now, it's like candle close, price, candle volume, and time. So for example, if I have the 15-minute Bitcoin candle closing above 90K, then I want this TWAP to be executed. Or if you can change the operator around. And then another very cool thing is you can have multiple conditions. So if I wanted to be executed in 2 days at whatever time, then both of these must be fulfilled, and then only then will this TWAP execute. And you can also make it an OR operator so that it's either of them. Whatever happens first is the condition for this execution, which is kind of not exactly what you talked about with the ATR-based stop yet, but it's like a preform of that for like algorithmic profit taking, basically, or more automation options.
Yeah, definitely something that I'm really looking forward to, in all honesty. I think it just gives
me too.
Far more flexibility. But I think one of the key things, though, for anybody who's watching the stream today, is that these features are all really powerful and they're very, very, very good. But really, it should also really help you think about your own trading style. So when you have a trading strategy, don't just use a limit chase for the sake of it. Really have an understanding of your game, and also understand some of the functionality available and how that can then be incorporated into your execution strategy. So when you've got a trading strategy or a playbook, and you've got certain rules about how you execute a trade, well, if you really truly grasp some of the functionality available, it will help you think about, okay, you know what, maybe I can execute trades going forward in this manner, or maybe for a given range play or a trend play, here's how I'm looking to then execute. So there's a degree of optionality in terms of how you execute your trades. And I think when you really want to improve as a trader, for me, it comes down to trade execution. If you can nail your trade execution, that for me is the biggest differential between having a 2R setup and prospectively a 3R setup, because you've understood your game significantly, but you've also have a process, not just within your strategy. Okay, everybody talks about strategy creation. You've got to have a playbook. You've got to have a strategy. But what about the actual execution part? How do you remove that high degree of variance from your trading into becoming a far better performant trader? Because now you've really nailed the way in which you want to execute. And then when it comes to the journaling aspects, you can then figure out, all right, you know what? I'm trading in the right zones. I'm executing in the right zones, but I'm just getting stopped out by X amount every single time. And then you can refine that granularly. And hopefully move towards becoming a better trader. Because it is, for me, trading is not only just about context or understanding when you want to do business, but it's also about how you want to do business at a level, which, I think a lot of people who aren't really taking trading seriously to the extent that they should, it's just, prices come to this level, let me just hit buy. Prices come to resistance, let me just hit sell. And I think trading is far more than that. And that's just a very normalized way or generalized way that trading is perceived. But I think if you really want to go to the next level, it's understanding how you can actually perform far significantly better through trade execution, and that's these are some of the features that I'm actually really looking forward to, in terms of just experimenting myself and seeing if I can incorporate or enhance my own trading performance as well. So yeah, I don't know if there's any questions in the chat. But if there are, please do let me know, and we can fire them off to our guests today. And if there isn't, then we'll just give it another 2 minutes or so. But so what's your thoughts on the market overall? I've not asked you, I've been asking you about the terminal. Do you have any thoughts on Bitcoin? And, I don't want to obviously put a gun to your head and say, are we in a bear market or bull market? But just more from a current point in the market in terms of where we are, and if you are looking to, in fact, why don't you tell us about yourself in terms of your own trading style? Would you consider yourself more to be a day trader, a swing trader, and so forth?
I'm definitely more of a shorter term scalper myself, but I've also gotten a bit more into swing trading lately. But or maybe not lately, because there haven't really been that many opportunities, because the crypto market is kind of dead. It definitely feels like we're in a bear market, even though price isn't like down that much from all-time high. But or I don't know, maybe I guess the whatever Trump just said brought us back from the dead, and now we're going back up again. But yeah, I prefer lower time frame stuff. Just making a couple percentages here and there, compounding that over time. And yeah, I guess for like swinging, I have to wait until more opportunities present themselves in crypto again. I've also been trading like a bit of gold and silver through like the hyper liquid options that are there right now, because there's just more going on there, and I guess you kind of have to look at other stuff as well if there's not much happening here.
Of course. No, it's it's great to hear different styles, different approaches. I've dropped off from being an intraday, intra-week trader to more. Well, I still am intra-week, but it's more like high time frame levels for Q1, just because like I said at the start of the stream, I want to take a backseat from trading every day to just taking some really good trading opportunities, whether that's 3-4 trades in a month, 5 trades, because it allows me to focus on building an advanced tool set with AI for trading. So, building my own custom screeners and scanners, and the way in which I want to not just apply that to crypto trading, but also to equities and indices as well. So, like I said at the start of the stream, for me, it's 1 step back and 2 steps forward, hopefully, for 2026. And yeah. And I really like the aspect that, there's opportunities to trade equities, whether it's on Prime, XBT, whether it's on Hyperliquid. I really feel as though, the way in which altcoins have performed, and it's been largely disappointing for many individuals who were hoping for better performance on altcoins on the way up. I think if you're just like me, more of a trader, you take it from one zone to the next. There's always opportunities in the market, irrespective of the direction. But really what I'm looking forward to, like I said, is the fact that we are now seeing the emergence of equities. If you look at something like Hyperliquid, for example, where, there's the ability to obviously trade gold and silver. I often execute on Prime XBT. Sometimes I've got an account there. That's where I generally trade commodities or indices. And, that's just one of the ways that I do it. But I don't know if there's any questions. Can you use a normal risk to reward tool to place entry TP stop loss like you can on TradingView when you click create limit order? I'm not sure if so. The users, one of the guests is asking, so like in TradingView you've got the risk to reward tool. Is that feature there where you can place it on the chart and it kind of pre-fills the entry, the stop, and the take profit? It's almost like a bracketed order, but you're using the tool. I don't think I've seen that. Maybe I'm wrong, but from what I remember, it's more from within the actual terminal, and you.
So is it like this one?
Yeah, like this, where you kind of throw this on the chart and it kind of executes. Well, you kind of set the thresholds here, the take profit, the entry, the stop, and then I don't know, maybe somehow dynamically it creates
not
based upon this tool. Yeah.
Through this. As far as I know, I don't really use the TradingView chart that much, to be honest. But as I showed before, like if you actually I don't know how this works because it's a bit new to me with conditionals. Wait, let me just go back to the live version for a second. Did it work? No. Here. So in the terminal risk tool, what you can basically do is just like it's like a little bit small, so I don't know if you could see it properly, but it will, if you input the stop and also input the target, it will basically also show you the risk to reward ratio. It's like a bit small here in the corner, but
yeah.
So it's not like the visual tool from TradingView, but it's kind of like the same thing. If you just like want to know, hey, what's my risk to reward in this trade? If I place my stop here, if I put my TP here, what can I expect?
Yeah, of course. Yeah. Just another question on the back of that. Is there like a position size calculator as a separate component, or is that essentially baked into the features that you showed us earlier? So just what I'm saying is there like a standalone position calculator somewhere in the terminal that users can access?
No, it's pretty much just within the place order component itself.
Yeah. Okay, great stuff. Yeah, I think I don't know if you've got anything more to add there, but it's been a great insight, certainly, and I'm looking forward to some of the features being rolled out, over the next few weeks or months. And but I don't think there's any more questions. But no, thank you, Soki. It's been a great overview, and I think we had a really good example of the news terminal, which is quite nice to see on stream, right? It's we've got the Trump pump, and we also how that was essentially displayed on the terminal. So I think it's just great because it allows you to focus in one place or on one interface. You've got news-based feeds. You can set your custom feeds up as well, and then you've got access to all the various exchanges. I think that's what I love about it. It's just a single interface to access multiple exchanges, news feeds, etc.
Yeah,
It's phenomenal, because I think one of the pain points in crypto is the fragmentation of
for
everything,
sure.
and hopefully now we're seeing a level of maturity with some of the platforms and solutions that are coming out, and surely it will enhance the experience for those of us who enjoy trading. But
Yeah,
yeah, that's great. So people, if you want to know more information, please head over to the Insilico Terminal website. Check out their Twitter page as well, or X page. And I believe there's some documentation and video tutorials on the YouTube channel as well. Is that correct?
yeah, that's true.
Yeah.
That's pretty much where
Yeah.
we should go if you want to know more.
Yeah, that's great stuff. No, but thank you, Soki, for coming on today's stream. It's been a real pleasure having you on, and I'm sure there's always time for you to come in the near future if ever you want to cover any more new exciting features. More than
Yeah,
happy
sure,
to
would
come
love
on.
to.
Yeah, it's been a real pleasure.
Thank you for having me.
No, thank you very much. All right, thanks. Cheers. All right, so no, thank you to Sokia for coming on today. I think what we'll do now is kind of move on to the charting aspect of the market. And in order to do that, I need to bring my TradingView screen over. Just give me a second. Just give me a second for that. But how's everybody's 2026 been so far in January? Can I have some price predictions? Where do we think the low on Bitcoin is going to be? I always generally ask these questions, but I remember asking Q4, what's the high for Bitcoin? Are we going to see 130, 140, 150 before the end of the year? There was quite a lot of bullish sentiment, and now we've kind of seen how that sentiment has flipped. So my question is, what's going to be the low for Q1? Or are we going to go lower in Q2? That's two questions there. So first question is, what could potentially be the low of Q1? Let's see some answers. Is it not the best? I'm not sure what's wrong with the volume. I do apologize. Not sure why my mic is pretty much screwed. So again, sincere apologies there, people. All right, let's try something. I'm just going to kill this screen here. Whoops. And hopefully that doesn't do anything dodgy. Oh, man. Okay, well, that's not going to work. So I just want to continue on today's stream really with the order flow aspects and kind of give an insight as to what I was talking about in the previous stream, and I think we're just going to do that from within Excel charts today. We've got the DOM and the ladder on the right hand side. We don't really need that, so I'll probably close that down when the chart loads up. So here we go. So I'm probably going to spend 10-15 minutes looking at this and go over some of the things that I saw essentially. Let me just switch off the VWAP. So in terms of my settings on Excel charts from an order flow perspective, now if you recall what I discussed on the previous stream, whereby what was one of the key levels that I talked about? Okay, one of the key levels that I talked about was essentially, if you look at the chart, it was that 97-98K level. Now, can anybody remember why I covered the 97-98K level? Does anybody recall why that was an important level? And if you watched the previous stream, you should have an understanding as to the context behind that. And that's certainly what I want to go over. So one of the exercises that I'm looking to cover in the next 15 to 20 minutes is that, look, if you want to improve as a trader, it's not often just trying to take the next trade and improve, but you have to go back and reflect upon what price did, where and why, and what were the inflection points, and What did you see in terms of information that you could have acted upon that you never saw or that you failed to essentially act upon? So that's primarily what I want to cover today. And I fully remember, on the previous stream, let me just get rid of some of the drawings here. We'll start off with a blank canvas. And that is essentially, when I look at the daily time frame here, let me just go to the 24-hour. Hopefully it doesn't reload the chart. I think it will. All right, just going to load up the last 93 days worth of data. But could anybody remember what it was or what I covered? Why was 97, 98K an important level to watch? Waiting for any comments in the chat if anybody wants to answer that question. If not, I'll just carry on and explain it myself then. But look, for me, it was evidently clear, okay? In terms of price action, just purely from a market structure basis, I probably need to do a better job of this. So let's go to in fact, we'll just leave it as it is. So when we had price, okay, consolidating at this level here, notice that when we broke through these lows, okay, we spent 1, 2, 3, 4, 5, 6, 7 sessions from the 4th of November through to Monday the 12th. We were trading between the 98K and the 107 level, right? And one of the key pointers that I made was that, look, when Bitcoin broke down through this level, the first thing that you really want to be paying attention to is, well, look what happened. In terms of the actual delta, if I can just increase the tick size here to 1,000, okay? Look at all the aggressive buying delta that we had down at the lows, okay? There's a fairly large amount. 19 million, 10, 7, 9.4, 38, 84, 112. Huge, significant buying there, okay? Now, that's not necessarily saying that, longs were opening. It could have been shorts were closing out at this level in combination with longs opening. Now, when I look at this, if I was to take an estimated guess, I would say, all right, price took out these lows on the left-hand side several days later, and you can see where all the aggressive buying came in, and you can see where the candle closed. It closed back above these key swing lows. So it was, to some extent, a swing failure. But what's interesting is for all that buying, for all that aggressive buying, where do you think the logical positioning would have been for stop placements? In my opinion, it probably would have been at this low here, right? And so, sorry. So when you see aggressive buying in the market, but the market is not able to push higher up, if their stops are below this level here, what do you think is going to happen with price? If you look at the reaction that we get in terms of what happened next, well, you can see the next candle opened up here. The market continued to sell off, and it wasn't just very light selling. Look at the buying, 14, 15 million to 2.36 million. But for all that aggressive buying, look at these sells here, minus 36, 31, 74, 60, 32, 8, huge selling, right? That was the first clue that the market is likely to go lower down. So anybody who's essentially positioned in the market from around this level here, whether it's around these lows and they're looking to add to their position here, now that they're offside, okay, these participants who are now trapped in the market are going to be looking to get out, okay, at whatever price they can in terms of where they are. If they haven't been stopped out, then as close as they possibly can to wherever their order was executed or where their average fill price was. Now, what's key here is this. Look at the thin move that we get once we come back below this level, and all the aggressive positioning where the stops are there. What do you think is going to happen? They will then become forced sellers. And that when you look at the unwind of positioning that happens there with forced breakout traders who are looking to sell the market lower down, minus 59, huge sells in the book, okay? When you see these large aggressive sells in the book, this is something that you don't generally want to fade or try to knife catch, because this is an unwinding of positioning that we saw build up from the last several days of price. Okay, and this is why I think order flow is quite interesting, because now that we've seen all this aggressive unwinding of positioning, which caused price to close at 94K, having opened at 99, so anybody who is then positioned in and around here is looking to get out of the market is primarily one of the reasons. Well, look, the market tried to make an attempt to push back up, right? It made an attempt to push back up, but look at the rejection. All that aggressive buying delta tells you that the market tried to push its way back up, but it was met with passive selling, because there's no aggressive selling happening at this level. So with no aggressive selling happening at this level, why is it that price traded this high and has rejected aggressively, yet the delta is fairly positive? That tells you that in this moment in time, where this high volume node is, sellers are in control around this level, okay? Because wherever, if you're trapped, you're going to move you'll want to close your position out as close as possible, okay? So this was essentially what was capping price for those participants wanting to get out of the market, and then those participants who were chasing price lower down, all right? So the reason why I've covered that is because, well, you've got to understand the context of price, that where did the market sell from previously? Where did we break down from? And what was the level that was ultimately capping price, where we never really got a perfect retest of this level? We traded through it. There's the push up, okay? This here, for me, was the reason why 97 to 98K or 98.5, let's just get it down to this low, was important, because despite the fact that we traded through it, we never got a clean retest, okay, where we would have typically seen a retest of the level, acceptance back below. That would have been the trigger to get short with the stop at the high. That's generally what you're taught. But when you look at the order flow, you know that, well, the odds of this really retesting this level isn't that great, because sellers seem to be controlled, chasing it down. You've got a level of compression, okay? When you look at this, this is compression into expansion lower down. Then you get the capitulation, all right? And there's your capitulation down into this low, because look at the buying wick now. Whereas previously when we saw aggressive buying, look at the aggressive selling. But what's more important, what do you notice about the fact that, well, we've got all this large aggressive selling, 26 million, 44, 47, 47, 11, 12, 21, 69, 30, 81 million there, 33. But look where prices closed. For all that aggressive selling, this to me was forced liquidations, okay? Longs being forced to close out their position. Not necessarily shorts opening at this low. I'm sure there would have been some, but you know, you've got your scalpers, you've got your day traders. But in terms of large positioning unwinding, very, very aggressive selling, okay? This is the kind of shit that you want to see. And when you look at the actual, the delta, you've got $1.84 billion worth of negative selling delta here at the lows, okay? But yet you look at price, where has price closed? We traded down into 80K and we've closed up at 85K. And the reason why the market couldn't go any lower down, well, because there was a lack of sellers at that point. And there was a high enough level of passive buyers willing to buy up the price, okay? Willing to absorb any aggressive selling from that point onwards, and where the spreads are fairly thin. So when the spreads widen, okay, so if your best bid is here and your best ask is there, well, not let's just say the best bid or the best ask, but in terms of book depth, if the stacked sells are still here and your stacked bids are down here, but everything here is fairly small, okay, it's not really going to take much for price to lift the offers and close higher up again, despite all that aggressive selling on the way down. So that's something that you have to understand when it comes to, well, how does microstructure work and what are the market dynamics telling me under the hood? So that was your first clue, that this move could essentially be exhausted, okay, in terms of sellers, because we've seen a large delta, we've seen a fairly large number of liquidations, prices wicked lower down but closed back above, all right, from probably what I would assume is all the positioning build-up that occurred prior to this on this slow grind down into an expansion. Now, like I said, what's key though is the fact that we had this key level here, okay? Let's just go back to the origin from where price broke down from. And if you look at where price comes back, and I covered this on stream as well last week, that look, we essentially have a local range here, okay? There's our range highs. This is what's capping price at 95k level, and we've got a somewhat of a reasonable range or a swing point low, capitulation low. We've also got an internal level here where price is doing what? It's gravitating and oscillating back and forth between these two levels, okay? And such that what I said was that, look, if we get a move which comes and takes out these two lows here, okay, and closes back above, then that could potentially be a long back up to the range high, potentially up to 97, 98k. Moving it forward, look at where price rejects. Look at what the delta shows us here. Notice that I've often talked about is that when you see price and aggressive buying take place at a previous range high, what's key here? What's actually key on this delta profile that you're looking at? This is the delta, okay? The numbers that you can see is the delta, but what can you see or what can you infer from the volume profile of this particular candle? Can you see how it tapers? Okay, and where's the majority of the volume? There's the 68% of where the majority of the volume of this candle is. This is the tapering at the range high that I often talk about, or the local range high, and there's the tapering at the range lows. In this instance, we don't really care about this. We're more interested in what's happening here. This is telling you that buyers tried to lift the market higher and got met with passive sellers, okay? And they couldn't find acceptance at this level. Close back in value. You can see the retest of this thin area, which gets rejected, and price sells off again. All right, is that clear so far? So again, I just want to go back to the previous example as well. And this is why I was talking about, don't just look at the delta explicitly, look at the way that the volume profile of the actual candle is. I guess in this instance that we are looking at the daily time frame for, if you're a swing trader, that's great, that's fine. That's pretty much okay, because you're not really looking to bottom tick this. You're looking for those key inflection points. But again, when you look at the tapering of this, look how thin price is, or look how thin the volume traded is down here in comparison to the bulk of the volume here. Yeah, these are subtle clues that you should be looking for when you're looking for a possible inflection point at an extreme capitulation event, whether it's at a local range high at this level here that I talked about. Look at the way in which the volume thins out. There's really nothing significantly being traded here. And what do? We perfectly take out this high. All right? All that aggressive buying that we saw at that level, if you look at the numbers here, 48 million, 44, 17, 48, that's nearly $200 million worth of aggressive buying here. Whether that's shorts being forced out, whether that's longs opening, but the fact is they couldn't move the market any higher. For all that effort, this is all the market could do. This is all it could trade, and then it got rejected, okay? That's a sign of weakness in the market at that point. But for me, the key inflection point was where? It was essentially this swing low here that I talked about, okay? And the thin zone, if you look at the inefficiency here, again, when I talk about thin spots in the market, that there's a prime candidate, because we've broken these lows here. Look at the expansion down, right? Significant expansion. Price didn't fuck around, okay? You look at the unwinding of the position. Look at all that aggressive selling delta. You can see that explicitly in front of you. But where's the thinnest spot on this candle? You've almost got two distribution points, where distribution point number one is this area here. And distribution point number two is all this here. And where's the thin spot? And where's the edge of that thin zone? It's over here, isn't it? And so that, for that reason, when I talked about on the previous stream that 97 to 98K is a level that I think we trade, and you've really got to watch for the inflection point, because there is a level of inefficiency here that if there is weakness in the market, then the chances are you can probably trade or sell this level with a stop above the previous node or a stop above the previous high of this candle, or some ATR based stop, which I think is far more better, because you'll have an easier way to interpret your performance from a journaling perspective. So you're essentially removing randomness if you place a stop based on ATR, as opposed to, oh, you know what, I'm just going to place my stop at the previous high, which is fairly random if you think about it, because how many times can you repeat this setup where there's your execution and this high is determining your stop? If you were to repeat that over 100 trades, you're going to get a high degree of variance, because on one given day your stop is going to be at this level, on another day your stop is going to be placed at this high, on another day you're going to be like, oh, the stop's really wide, you know, the swing high is too wide for me to place my stop, I think I'm just going to randomly place it because I can get more size on. That to me is not really thinking about your stop placement. That's just a degree of, you know, discretionary randomness and variance that when it comes to really understanding your trading, you really need to be more mechanical and systematic in your stop placement. And by doing so, you'll kind of figure out, well, where you are in terms of how you perform in terms of trading execution as a trader. And it's not something that's going to happen overnight, but it's a system. And when I talk about having a trading strategy and having a trading system, well, trading execution is a system within itself, with its own variances, because are you trading in a range bound environment? Are you trading in a trending environment? Are you looking to trade a thin, efficient area? So maybe you're going to structure your trade based upon some metric that you've backtested that, okay, look, when we get a thin area, we often get a very good inflection point in the market. How can I structure a trade around the information that I have? That's something that you have to figure out, okay? It's something that I continuously work towards. And still yet to this day, I've been working on the execution aspects of trading. But moving forward, why was the 97, 98 case of significance, okay? Now, just because I highlighted 97, 98K as an area of, oh, look, you want to be careful at this zone, doesn't necessarily mean that, oh, Exo said you should short 97, 98K. Well, why are you shorting this level? For what reason? Why? Because we traded there? Because price came up into this zone, oh, I should look to sell this because Exo, or I think this is resistance here, I'm going to just look to sell this. But why are you selling it? Apart from the fact that there's a 50% chance of you being right and a 50% chance of you being wrong. And if you've got limit orders placed in here, what if price traded up and just took these limits out and carried on going higher? Then what? Okay, so it's about understanding how price ultimately reacts at a given level, as opposed to blindly bidding a level and thinking, oh, if it sticks, great. If it goes through that level, well, that's just my fault. You know, it's fine. That's just part of business. No, not really. You can do better than that, in my opinion. So when you move across the line, let me just use this swing low here. We know that we've got this thin area of price, okay? Let's see what happens. Let's roll it forward. We're in this range-bound environment. We talked about this internal range. There's our key swing low, extreme capitulation wick. Price found acceptance at this level here. It closed back above there. You can see that every time price trades this zone here, it seems to be acting as support. And then we've got a clearly defined resistance level here. So we're just gravitating or oscillating between these two levels. Once again, retest that key support zone. What is the clue that gives us an indication that, you know, this could have been a decent long? Well, if you look at it in terms of the delta, you had a fair amount of decent selling. If you compare all the buying of 22, 82, 12, 18, 6.4, 13, and then we get a negative 12, 18, 30, 46, a big 50 and a big 30 down at the bottom. We've taken out these lows here. Okay, so is this a case of what you need to be questioning is that, all right, all this selling that we've just seen here, was this actually just stops resting on this level where participants were long? And that's why we're seeing these positions get stopped out and puke and generate the fact that, well, there must have been some fairly big passive bids resting at this level, because for all that aggressive selling, why didn't price move very far? Because if you look at the volume was $20 billion. The delta was only minus 4.8. And so there was no real continuation in that. And you can see how price closes above it. Then look how thin the move is up. Look how thin the profile is on the way back up, okay? That tells you that this was probably forced selling, and the liquidity is fairly thin in the books, because it really didn't, the sell side liquidity is fairly thin in the books, because it really didn't take a lot of effort to move price higher, did it? Back up to 86, having run the lows at 85k. So these are the sort of signs that you can look for in the market to ascertain where there might be some inflection points. Okay, now let's move forward. This was the level that I was talking about, where watch for this thin inefficiency here. Okay, and when you look at this from a candlestick perspective, this is what it looks like. When we broke down, if I can just clear the chart, when we broke down from that key low, or these key lows that I talked about, we never retested that level. So you know immediately that if this was the level where that was the high that we got on that on the next following day. Sorry, just give me a second. So there's what we closed through with volume. There's a retest, the up candle before we saw continuation lower down. And there's, if you want to get really refined, well, we never really traded this thin inefficiency that we see at that 97.5 level, give or take, okay? Look how very little volume was traded in there. So what's the key? Well, number one, price trades the level, great, that's what we want to see. But what really would have given us the indication that, you know what, this could actually be a short setup here? Well, the indication for me is the fact that when you look at price, just give me 1 second. When you look at price in terms of what happened, okay? Look how much aggressive buying there was. 22 million, 57, 41, 41, 38, 14, 12, 16. Look at that tapering off. And then look at the huge delta, 27, 38. Nearly 16 million, well, nearly $70 million up top of forced buying, aggressive buying, breakout buying. And what did price do? Where did it trade? It traded, essentially, into the level that we had mapped out, right on the edge of the thin spot. Okay, and then what would have given you a trigger to go short is the fact that, all right, you know what, this here should cap price, because for all this buying, you don't really want to see price now push and find acceptance above here, because if it does, that for me is a reason to think, all right, you know what, the market's probably going to go higher. But as long as this node here is capping price, I know that I can place my stop if I wanted to on the other side of the thin node. And the fact that I want to see a swing fail of this level, now I'm in business. Now I can hit the backside of this trade. So from a volume profile perspective, again, look at all that aggressive buying effort. Look at all that delta. 265 million worth of buying volume here in terms of delta. 14 billion in terms of volume on this candle here. Look at the positive delta. Look at all this aggressive buying. Fairly significant buying volume, yet we've closed red. Who's in control? Because buyers aren't in control here. And then for all that aggressive buying, what do you think is going to happen when they're offside? Who's going to puke their positions? And that's what causes a very fast delta unwind all the way back down again, okay? Into what would have been, for me, the mid of this entire range here. There's my range lows. There's my significant key inflection point. Where's the mid of this? The mid for me was here, okay? Give or take. Took out these lows, all right? Into what was the origin of this rotation up was here, okay? That there, in essence, is how you can recognize aggressive buying, force buying, okay? And I say force buying because why could it have been force buying at this high, okay? Was it a case of the fact that, well, look, why could it have been force buying? I'll explain why. And again, homework or exercise, understand what open interest is doing, understand what CVD is doing at this level to help you understand, are these longs opening here or are these actually shorts who may have been positioned because look, we've taken out all these highs here, okay? If you look across the line, we've taken out all these highs and was it a case of, all right, stops rather resting above here for anybody who's shorting this and shorting this, where are they going to place their stops? They're probably going to place their stops here. Alternatively, if anybody's got their stops tight here, okay, and they're in a trade down here, or they're in a trade down here and their stop is above there, well, what do you think is going to fuel the move higher? When they get pushed offside, well, look at what this candle does here in terms of aggressive buying. Look at the spike above these highs, okay? Look how thin volume is, and we get aggressive buying. Breakout traders, forced selling, forced buying because stops are being run, price finds acceptance above the level. Then the market goes higher, okay? This here, what I want you to figure out is, was this actually opens here, or was this actually anybody who shorted the market upon this rejection, okay? So let's just say anybody who shorted the market upon this rejection with the stop there, is this what caused the cascade higher? And was it the case that anybody who had wider stops from their earlier shorts, from the range, a local range high, were their stops resting above here somewhere? Like I said, if you were shorting this level, you're probably going to think, oh, well, this is too wide of a stop. Let me just randomly put it above this high over here, okay? Think about how participants are likely to trade in the market. Think about their positioning, their stop placement, and what that means that if this level gets traded, what is that going to look like? If it truly is stops being run, and if it truly is positions being forced to close out, then what does that mean in terms of a profile perspective from a volume profile? Look at the thin tail that we get on this candle here. And then look at the aggressive buying that we see up top. For all that aggressive buying, we couldn't push price higher. And then the big clue for me here was this. Look at the positive delta, yet price closes lower down. Trapped positioning. There's your unwind. Very fast and aggressive to the downside. And that's the trade done. Okay? Does that make sense? From a volume profile perspective, from a delta perspective, from a footprint perspective. And notice how when it comes to using footprints and delta and volume, notice that I'm always only really paying attention to areas of interest, points of interest, zones of interest. Now I took a trade on this from 97.5 down into 94.5, okay? I just traded it from A to B. I didn't catch this move down here. For me, I was happy with this from a trading perspective. It was nice and easy within a day, okay? But I should have really captured more downside. Are there any questions for that? Is the explanation clear? Has it made some logical sense? Please do let me know in the chat or let me know in the comments. But this, for me, is one of the ways in which I believe information edge can exist to allow you to not second guess, if price is coming into the level that you wanted to trade, but you don't know why you want to execute, or you're hesitant, or you're fearful. Well, now you have a better understanding of what's actually happening at that level to give you further conviction in executing your trades, and then looking for that rotation back down into what is a bracketed range bound environment. Now, the other key aspect here is the fact that, well, look, remember what I said in the previous stream, that, look, I suspect that price is going to revert back into the mean of the 12 and the 21 moving averages. Well, we did. We traded into that key spot, okay, around here, in confluent with this level here. That 99, 102, 99, 100, 101 level, okay, it stopped short. That tells you that, just like I explained in 2022, you're going to see participants get really bullish on this, because they're going to be like, oh, look, higher low, equal highs. Oh, look, we've made a higher high. This is bullish. We're going to go to 105, 106, 107s next. Same playbook over and over again. The same shit happened in 2022. I didn't understand it to the extent that I understand it today. And that's because I've put in the screen time. I've gone and looked back at historical facts. I've built up a playbook. I've looked at this happening over 30, 40 times on Bitcoin. I know what I'm looking for when I want to execute. Okay, it's repetition, but repetition with a purpose. Repetition with, okay, I can see why price rejected here. Not because of all this is a swing fail and that's it, but I can really look internally of this candle. And yeah, I can see some really good information. This is based upon a 24-hour candle. Let's go to the 1 hour candle over a 30-day look back and see what that looks like. No, you can't have this type of footprint on TradingView. Theirs is slightly different. This is a delta footprint. But essentially, this was that price action that I talked about. Okay, and if I just drop the tick sizes here, you'll see it yourself. If you want to get really granular, this was the swing fail of this level here. Let's just get rid of that. But if you want to get really granular, okay, this is how you can do it. And this is based upon the 1 hour time frame. Look at all that aggressive buying delta in terms of the 1 hour time frame. Fine, we can take this low, this swing high. Okay. All that aggressive buying, 9.7, 27, 6.9. So over a $200 move, all that aggressive buying and price closed back below it, that for me is a classic setup that I like to take, knowing that, okay, as long as this now caps price to the upside, this is essentially a supply zone. Okay, because for all that buying effort, we couldn't push price higher. So if I'm looking to execute the trade, I don't really want to see price trade back above 98K. The rest is history. You get the unwind, okay? You get the unwind, you get aggressive buying coming, stepping into the market, and again, really trying to lift the market. But look at this. For all that aggressive buying in the market, it was a fairly weak attempt in terms of pushing higher. Okay. So that's it for today's stream. I think what I'm going to do, I will be running another stream on Sunday. The reason why I don't really have any trade setups to trade or talk about as opposed to last week is because, well, one, we're probably running out of time, and two, I think given where price is, it's not really in a zone that I want to do business in. And I've stated before that, look, moving forward, I want to be trading around the high time frame inflection points. I want to be looking for inefficiencies in the market, whether that's single prints or whether that's fair value gaps, call it whatever you want. But I'm looking to do business at those extreme points in the market because they are the points in the chart or in the market that give me the best inflection points to structure a trade around and hopefully execute just as well. All right. But again, when I look at all of this price action, I do not have a clear read. I know that we are in a current downtrend context, and for me, it wouldn't surprise me if we see price kind of move towards the range lows here at 79, 78. The key for me in all of this is ultimately when I think of this as a range, then if this is my local range high, okay, this is the SR level, that key SR level where we saw consolidation before we broke down, then this is the range for me, this is the range low. Then look, for me, it's very simple. If we start trading back below the mid of this range, then yeah, we do have a problem, okay? And that then increases the probability that we're going to trade to that 79, 78, 77K level, where I will need to see signs of aggressive selling, just like we saw here, unwinding, and of all this positional build-up, all the longs that are building up here, maybe there's more to follow through in terms of if price pushes up and then sells off, expect all these lows to add fuel to an extension lower down. And if there's enough passive bids interest to absorb all that aggressive selling and we start seeing momentum or acceptance back inside the range, that for me is a long, and I'll be looking to trade that back up towards this zone over here, okay, from a swing perspective, okay, over multiple trades. That's the high level 10,000 foot view. But as it stands, where price is today, this is not a zone that I want to do business in. I'm not looking to intraday trade this. I'm not looking to take short-term rotations for the remainder of January. I think equities and NASDAQ has some downside pressure. I think the risk is still to the downside, but let's just wait and see what happens over the next few days, and hopefully I shall be back on stream on Sunday. So that's it for today's stream. Like I said, if anybody's interested in the 3-month mentorship from January to March, I will leave a link in the description after this video, maybe in half an hour's time. So if you want to join, you're more than welcome to. It's not a paid service, it's not a paid group, and it will end in March, okay? So I wish you all the best. Have a great week ahead, and I will certainly catch you on Sunday. Take care. God bless. Bye-bye.